This is the Stock Trading Reality Podcast, episode 135.
Trading should be boring, and that if you're getting a little too excited, you're getting a little too shaky, you're probably not gonna get into a good trade. You should probably just step away from the computer, turn off the charts, take a breather.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, Soft Shell Crab Sandwich. Yes, please. Clay Trader.
It may sound disgusting, but I promise you a soft shell crab sandwich is really good. And maybe there's context that comes with it if you are eating it like frozen out of the grocery aisle. That's TV dinner soft shell crab sandwich. Maybe that's a little rough, but the last time I had one and the first time I had one was in Baltimore, Maryland. And Maryland, which I was never aware of until my visits there, they are known for their crabs, blue crabs in particular, and they're all about their seafood there, and it makes sense. They're right there on the Chesapeake Bay. But point being, a soft shell crab, if your place where you live, if your location, and you want to take me out for lunch and we'll talk stocks, or heck, I will take you out to lunch to talk stocks just so I can get a soft shell crab sandwich. Yes, please. That sounds fantastic. Ches, I already know the answer to this because these are one of the things I know about you, but you are allergic. Well, I guess you could have a soft shell crab sandwich, but that would imply that I'd be having to give you mouth to mouth. Is that pretty much how that would go?
That's pretty much a safe assumption. Or you have to give me a tracheotomy or something, stab me with a pen in the neck. So maybe that's something you do want to do. But yes, I'm more pleased that you remembered. You didn't do this fun fact and then remember that I'm allergic to shellfish. So I'm happy you remembered. So that's all I'm going to take out of it. But yes, I could eat one. Kelly and her family love like surf and turf, and they do like crabs and steaks. And the running joke there is that since my wife is a nurse, that I could try a bunch of crab, and then if I'm on the verge of dying, she could save me. But I don't have that much faith in attempting that at the dinner table. I don't feel like being rushed off to the hospital, so I usually just stick to the steak. So you enjoy your crab, and I'll enjoy my steak.
Isn't a tracheotomy some of those things where like I'd have to puncture a hole in your throat or something like that?
So that I could breathe. Yep, yeah. So maybe you want to stab me in the neck, and then you'd have a legal excuse to do it. But for the most part, they usually recommend folks off the street don't stab other folks in the neck. This
podcast is getting violent. Last week we're talking about people punching me in the face. Now we're talking about stabbing you in the throat. I think we're losing it. We're going off the deep end here.
It's been a long summer.
Yeah. I don't know what it is, but things are getting violent around here. But a good way to ease the violence is let's just go out to Hawaii. And that is where our guest today, Tony is his name, and he has been on the show before, episode 88. And yeah, the little bugger is out there in Hawaii. And I'm jaded. I'm bitter thinking about it right now. But like I said, he's been on before. We were having him back, so we get to kind of catch up on where he's at now. And he has moved on from where he was in the last time. And, he's a lot of good discussions about journaling. He's doing a little bit of some quantitative analysis type stuff. And I think this is 3 weeks in a row now where we've talked about futures. And I know it's called the Stock Trading Reality Podcast, but really it should have been called the Chart Trading Reality Podcast because when you understand a chart, you can trade many things. So we're going to hear quite a bit more about futures. But even if you don't trade futures or think that this interview is all of a sudden going to become obsolete to you, no, there's a lot of good psychology that's talked about and a lot of good experiences that are shared that no matter what you're trading, you can relate to. So without further ado, let's hear from Tony and head out to Hawaii. Aloha, Tony. How's it going?
I'm good. I'm doing good.
Now, before we got recording, I was already kind of a little bit jaded because, Tony's out in Hawaii, and he's 6 hours behind us, so it's evening time for Ches and I, but Tony, it's not even lunchtime yet. But that's besides the point. The point here is that Tony is surrounded by crystal clear blue water. So how's Hawaii life going for you?
It's going good. Just living the life, trading, making millions. Just kidding.
Trading, making millions from your private. Do you own Maui yet? That's really the question that we should be asking: is have you purchased the island of Maui? But you probably can't disclose that because the paperwork's probably still underway. Is that what's
Still
going
working
on.
with the government to complete
Yeah,
that purchase.
yeah, exactly. So,
Yeah,
but
yeah.
good. Well, I'm glad everything in Hawaii is going. I'm shocked to hear that the Hawaiian life is going well for you. But I guess when we get started here, why don't you just walk listeners through when you were first on the show, kind of where you were at then, and just kind of nutshell, that part of your journey. That way we have a little bit of context in case listeners, did not listen to your first interview. But listeners, I'd encourage you to hit the pause button right now and go back to episode 88 and listen to Tony's interview then, and then you can come back and listen to this. But if you don't want to do that, Tony, why don't you just kind of summarize, everything, up until, the last time you were on the show on episode 88.
All right, yeah. So since then, I gravitated towards switching from options to futures.
No. What? Just walk. Where were you at? Where did you? Just quick. Where did you find the market, and then what were you trading at that point in time?
Quick summary of your past podcast, pretty much. What were you doing then, and then we'll get into what you're doing now.
I was trading penny stocks, and then I realized that I didn't really like penny stocks, so I gravitated more towards options, just because I like the way that blue chip stocks moved better, because there's more context, and I was not managing risk well at the time, and I was slowly learning as I went along, and then I stumbled across to futures.
Okay, so started in pennies, discovered options, struggled managing risk, and now it sounds like you've come across futures. So that just opens the door. Where did you hear about futures? How did this all kind of come to be? Where did the futures enter into the picture?
I really started trading futures around November, around when crude oil was kind of a rage, and then there was the OPEC meeting and everything. I got introduced to futures in a class. We had a simulation, and then this one guy was up. He was up 6% overnight, and I was kind of wondering how he jumped up in the ranking so quickly. And then he told me futures. I looked into it, and that's kind of how I started down the rabbit hole.
Now, what class is this? Because I went to college and stuff like that, but we didn't do any cool simulation stuff like that. So is this a college class or something?
Yeah, college class. It was just an introduction to investments.
Cool. Yeah. Well, that's pretty cool that they do that. And then so obviously you see how this guy jumped to the top really quickly with futures, and now your interest is peaked into futures. So what'd you start doing then? Obviously you've already been around. You kind of understand, charting and risk management, stuff like that. So was it kind of an easy, natural transition for you, or did you find some pitfalls? How did it go? Did you open up a brokerage right away, or did you start paper trading? What'd you do?
I paper traded for a bit, and then I guess easy to confuse luck with skill, and because futures are more leverage, it's definitely more dangerous. So definitely learned a few hard lessons, both live and on demo, eventually going down the road that led me to manage risk even better than I did before. And there was more emphasis on that because of the risk in the futures market.
All right, well, everybody loves a good painful story, and I think everybody learns from pain the best. So maybe you're hoping Chez and I didn't notice the statement you made about a couple of big zingers, if you will, both on demo and on with real money. So walk us through one of those trades that kind of really smacked you in the face and said, yeah, maybe I'm not managing risk as well as I thought I was.
Well, it was just kind of having a longer it was more applying a longer term perspective to a shorter term time frame. So before I entered futures, I wasn't really starting from penny stocks and all, I wasn't really focused on looking at the overall context, from the daily perspective, from the hourly perspective. So it was kind of hard when I transferred into futures, because a lot of the movement is based on the daily and the hourly time frames versus 5 minute, where nothing's really valid on the 5 minute. Patterns don't have to break out. It's pretty much completely up to the trend on the long-term anchor, where you are in the overall context of it.
What do you mean a pattern doesn't have to break out? Because as an outsider listening in, I would say, well, a pattern doesn't have to break out on the hourly or daily chart either. So what exactly do you mean by something doesn't have to happen?
Well, it's more of like when you're trading equities. I know there's a lot of emphasis on, like, some people like to play VWAP bounces, some people like to play, both like breakouts or whatnot. But when you're on the futures market, it's a little different because your little bull flag on the 5 minute could be just part of a long-term descending channel on like the hourly or the daily chart, and that has a more stronger impact on what the bull flag is going to do than the actual pattern itself.
And I want to kind of jump in here too and come to your rescue, Tony, before Clay goes on a rant about how all the time frames are different. But so to kind of confirm what Tony is saying, it is much more likely, and I've seen just in the past, you are much more likely to be whipped out, stopped out, pretty much have lots of kind of fake outs, breakouts, fake downs, all this kind of stuff on the shorter term time frames and futures. And I've noticed that personally. That happens in stocks all the time too. I'm not saying it doesn't, but to kind of me personally, the same thing happened in Forex, and Forex is kind of its own little crazy market. The best way to kind of position yourself on those is to kind of look at those major trends and to make sure, Tony, correct me if I'm wrong here, but focusing more on the hourly, you are giving it more room. Essentially, you have a wider stop. So essentially, you are trying to capture the larger trend of the trade. But if you're trading on the 5 minute using your stops, 3, 4, 5 ticks or something, it's very likely you're going to be stopped out. Am I reading that correctly?
Yeah, exactly. Especially with a smaller account where you can't risk as much. Like if there's a bull flag in the middle of an overall long-term channel, you might not want to take the trade just because of the chance that it might not work out and that we're still just in a ranging market.
So you are very account conscious, it sounds like. What these bad trades that occurred, I mean, were these trades that wiped away 20% of your account, 30%? I mean,
pretty much
go a little bit more into.
Pretty much a margin call.
Okay, so there was pain associated with these bad trades then.
Yeah, I mean, you only learn from your mistakes, right?
Yeah, for the most part, I would maybe. I'll partially agree with that statement, but maybe we'll chase that rabbit hole in a little bit. So, at what point? I mean, how are the accounts surviving? You're getting margin calls. Are you just pouring in new money as you go?
No, I got the margin call, and then I realized, something must be wrong, and then, I started just like looking on the web, learning some more stuff, just reading a lot of books, and I started trading on demo again just to build the confidence, and then testing different strategies to see how I could like tweak my strategy so that I can manage risk better, how I can get stopped out less, and all that kind of stuff.
So back to the drawing board, and how long were you in this sequence of things where you were kind of just reassessing everything and putting together a new plan of attack?
I would say up until June this year, so about like half a year of self-discovery about your own type of trading personality, trading style, and what works and what doesn't work. And I'm still in the process of self-discovery, but I've discovered a few edges that have been working, and I've been just playing on those edges.
Well, good. I'm glad you're kind of finding some stuff out, and I completely agree that your personality, your kind of outlook on things, a lot of personal stuff comes into trading, and there's anybody who disagrees with that, we all preach to be robotic, but I promise you that every individual trades differently based on kind of different stuff. Now, what I kind of want to find out, though, I was hoping you would say you finished your self-discovery, you found the Holy Grail, and now you have a 100% hit rate on your trade. So I guess you said you did find a couple of things, though, kind of for your own kind of trading edges. Do you mind sharing what those are? What edges are you specifically talking about?
Mainly statistical edges, where so I started doing a lot of quantitative analysis, digging like data mining into like different markets, looking at how the daily, like what the range is, like where we are in the current range, just to assess how much inherent risk I'm actually taking when I'm in a position and how likely it is to work out in my favor.
Now, is this stuff you're learning in classes, or is this the stuff that's coming from books? Where is all this quantitative analysis stuff coming from?
Mostly from books and this other person that I've been learning from.
Okay, so you've just continued to expand, and it just sounds like by looking at the quantitative analysis, you've narrowed down what you personally feel comfortable risking.
Yeah, I mean it's just it's the fact of trading and like knowing where you're wrong and knowing how much risk you're actually taking in the trade. So I guess like if you're playing on a 5 minute time frame, then like it would just be purely mostly risk reward ratio and to have a positive expectancy. But if you're playing the long term, you have to know the implications of where the market might bounce and the likelihood that it's going to reach that area.
Gotcha.
And
So
I would assume
go
you're
ahead,
talking
Chaz.
about areas for both your stop loss and your target, right?
Yeah, like if you're just playing purely, if you made your decision purely off, a smaller time frame, you do have to stick to that and you just stick to your risk reward ratio, and that's really all that matters on the smaller time frame in futures.
Absolutely, and I completely agree. It is merely a numbers game, and it's about small losses and pretty much riding those winners. I think 2 weeks ago now, Clay, we had our podcast with a guy who swing trades futures, and a lot of small losses. I think that's the exact quote he said. And then the one winner pays for 10 or more losers. So completely understand for kind of the shorter term time frame. So obviously, you've kind of taken quite a turn in kind of looking at more kind of quantitative stuff. Talking about ranges and things like that. So, I mean, how has that been going in practice? It sounds like you're still kind of testing out this stuff, or you're back to live, or what's going on there?
Yeah, I'm back to live right now. I finally discovered which markets I like to trade, and I think an important part about that discovery is journaling, and I think that every trader should journal so that they could not only like track what they're doing in their trades and their risk reward and such, but like what they're thinking about at the time, so they can be held accountable. And you can really look back to see what went wrong and why things went wrong, and you can start to see if your strategy is working on a statistical basis.
Do you happen to have your journal by you by chance?
Uh, yeah, I do.
Would you mind like just giving us like, I mean, I don't know, if are these like 8-page journal entries, or are these just like little bullet point notes?
So I actually use this journaling app called Edgewonk, and
Oh, okay, it's an app. Awesome.
yeah, yeah. So it's just on my computer, and then you can set different you can add like different setups that you like to trade. You can import your trade, put your intended stop loss, intended target, and then it would just crunch out the numbers for you. Yeah. So I don't think that people specifically have to use Edgewonk or something. I think just something simple like Evernote would be okay. You just have to be really detailed. I just like Edgewonk because it provides all the statistics for me and I can see it. And just sharing something from my personal journey is that I personally, I ask most people want to be right, and to be right, your risk reward has to be a little lower. So it just depends on how, like, some people like to, they're okay with taking a lot of small losses and hitting that home run. But personally, I like to keep my risk reward around, it's usually around 1.5 to 2 per trade versus the amount I risk. And that allows me to have a decent win percentage still.
And I think it's actually really cool of you to kind of bring up. And I'm also a firm believer in kind of journaling, and you can kind of start to see trends. I usually look back at the end of a week, and then I look back at the end of a month to kind of spot times when, I had a bad week. What's going on here? Oh, I was kind of sick, or I was very tired, or I had other things on my mind. And you kind of start to spot trends that, Clay, I think we've talked about this kind of before, but kind of the recency effect where you'll much more recall the last trade you had than, say, the last 5 trades. So you could win 4 trades in a row, and then you have one losing trade, but your brain is hung up on that one losing trade. So the journal is just kind of a way to look back and say, hey, I'm actually doing really well, and, I had a bad day here, but other stuff like that. But you also bring up a good point in terms of kind of the risk versus reward, because you pretty much nailed it. There's people like we interviewed a couple weeks ago that could have 10 losers in a row and then make up for it with literally one kind of trade, and then not only make up all those losers, but then be well in the profit. Then there's other traders as well who are just like you said, would rather have a higher win rate, and I know people who trade with like a 1 to a 1.5 risk versus reward, but they have a high hit rate. They're just very good at kind of spotting their trades, and they're willing to kind of essentially risk more per se than their reward. Well, not risk more than their reward, but they're really almost to do kind of 1-to-1, 50-50 trades, because they know statistically, they're 65%, they're having winning trades, or 70%, or whatever it is. So that kind of brings up a good point, because some people are very, very good. I always bring up Hooch. Hooch is absolutely amazing at his chart vision, and he can spot it. And honestly, he always adheres to kind of, a good risk to reward. But if he even went to a 1-to-1, it kind of brings up a good thing. And I also think it's kind of a personal thing. It's a personality thing. Some people are going to be better at spotting stuff, and other people are going to be kind of more of the, small losers, and one good trade pays for all of them. So I think that's definitely interesting, but I'm also a firm believer in journaling. Absolutely.
So are you, how detailed do you get in your journal? Are you literally doing feelings and, well, I was feeling this way and I did that, or is it more so just you're journaling the numbers so that you can keep track of the statistics and all that good stuff?
Well, I've kind of grown to separate the feelings away from the trades, because I eventually found out that trading should be boring, and that if you're getting a little too excited, you're getting a little too shaky, you're probably not gonna get into a good trade. You should probably just step away from the computer, turn off the charts, take a breather, because you're probably gonna mess something up if you're kind of jittery. And that you just have to make a plan when you're sitting down, the charts aren't moving, and you have pretty much like in futures, because you're looking at the same thing every day, just areas that you want the market to kind of go to, and then you want to see like some confirmation or whatever indicators you might use. I personally use a combination of candlesticks and indicators to filter out what type of price action is happening at the level that I'm watching, and then based off what happens there, I'll decide if I want to take the trade or not.
Okay, cool. And Ches, I could have sworn I've heard somewhere, maybe on the show, that trading should be boring. So Tony, well said there. Trading should definitely be boring. If you feel like you're on an amusement park roller coaster, you're not doing something right. Now, you mentioned indicators. What indicators are you using that's in conjunction with the candlesticks?
I personally use I have an ATR, a little display box, just to see what if volatility is increasing on the day, because when I first started, it used to drive me insane that you would have weeks on weeks of range bound tight range action, and then suddenly you have an volatility expansion, and then you would have to actually widen your stops. And then that's a factor that you have to consider before you enter your trade too, that the risk on those particular days are going to be higher, especially around news events and all that kind of stuff. But other indicators I use is I really like the MACD and the stochastics, just to kind of gauge the momentum and where the overall trend is on an indicator basis. And I do look at order flow as well, just to see it's kind of like, I guess, the same as level 2 that people use on equities.
Right. And I know a lot of people who use pretty much ATRs mainly on Forex and futures specifically, because you pretty much nailed it. And Clay, we talk about this too in some of the Clay Trader University webinars. Essentially, sometimes the distance of a candle could be, say, 5-10 cents, when volatility is low. And then when something gets roaring, one candle might be $1 each. And, it's pretty much the same thing in the sense of, setting your risk versus reward. When volatility is $1 every minute, your stops are going to be much wider. But we're always preaching, and I always preach, that your best risk management control is your position size. Now, Tony, that's a little bit difficult, though, kind of trading futures, because even one contract sometimes feels like too big for somebody. I'm going to assume you're only trading with one contract at a time, because if not, that I could understand why you get margin calls if you're trading multiple contracts with kind of wide stops. Are you trading one contract, or what are you doing?
Yeah, I personally have a rule that I don't ever scale into losers. If because I have a small account, I just can't take on the additional risk. If I know my edge is working out and the market is, going in my favor, I might scale in one contract on the long side and then take partial profits and then take the rest off at the original target.
And how are you feeling with the position sizing? Do you find yourself nervous, or are you pretty at peace with the way you're trading right now in terms of the position size? Because a great way that maybe your position size may be too big is if you're nervous or something like that. So how do you feel mentally, or I guess what is your journal saying? Is your journal concluding that you're pretty much at peace of mind with your current position size?
I mean, I can only take the minimum position size I can take is one contract. So I think it really just depends on choosing which markets to trade and at what time of the day that you can trade. I'm kind of happy that I did find futures because I can trade during the London market where it's not so volatile, where I would take most of my trades on crude oil or gold, whereas I wouldn't normally trade crude and gold during the New York session just because of the volatility. And just recently looking at my journal, I really don't like gold. I realize I really don't like gold as a market just because of how choppy it is. And I rather trade the 30-year bonds, which a lot of people would probably fall asleep trading, but it moves more. It has a more smooth movement to it, and then a lot of my wins are from the bonds. So that's what you got to trade.
I find that super fascinating, and it just once again sheds another data point for us of what we preach. It's a case-by-case basis. For Tony's own admission, some traders, maybe they just heard that he's trading the bonds and they maybe just nodded off and just fell asleep. Oh, that's so boring. But here,
oh my God, what are you, 75 years old, Tony, trading the bonds?
Yeah,
no.
Yeah, exactly. But here's Tony saying, hey, I like it. It's smooth. And smooth, what does smooth mean? Smooth can mean different things for different people. But in Tony's world, which is the only world that matters when it comes to trading, smooth is something that is helping him. It sounds like or you were saying, do very well with it. So I love that, how you admitted some people might find it boring, but hey, it works for you. And at the end of the day, that is all that matters. As far as, staying on the topic of position sizing, are you looking for some sort of, statistical number, statistical accomplishment before you start to raise raise position sizing? Or what's kind of your plan of attack for when maybe you'll start to increase, the size in the futures market?
I usually only increase if the price action is greatly exceeding what I originally expected. What I like to do is I do play patterns too. I really like bull flag, bear flag consolidations, like just waiting for the consolidation. And pretty much from there, I kind of just wait until it's in the bottom of the bull flag, or I guess the top of the bear flag, and then I would actually short or long around there, just so that even if I'm wrong, I can still take profits at the top of the channel. And if it doesn't break out, that's okay, because I locked in my profits and I was wrong, but I still got a good cushion.
Right, and
my
I would
side.
venture to say also kind of, that keeps your risk reduced because you're pretty much, if it's wrong, it's probably wrong right away, right?
Yeah, I personally don't believe in buying the breakout in futures because I think there's a lot of impulse move and the market just from hours and hours of screen time. I realize that the market it always likes to come back down and retest if there's buyers or sellers at a level. So there's really no reason to have any FOMO if something is spiking up because you'll have your chance to enter and more times than not that'll be the case.
Well said, well said.
This sounds
There's
this
always going to be another time to enter. Absolutely. The anti-FOMO statement right there. What were you saying?
I was going to say that sound maybe. I mean, it's not like people in the community haven't told me to check out futures, but I like this. Things breaking out and then going back. That sounds like a good little fake breakout
you'd
type
be great
setup.
at fading it.
Yeah,
Yeah, you'd be great.
That sounds like a interesting statement on your part, Tony. So that really piqued my interest to know that. But I like it's going to come back or not. It's not for sure going to come back down, but I like how the buy and the breakout. There's a lot of impulse that goes into it. FOMO, fear of missing out. In case you're not sure what that means. And the market's gonna say, yeah, all right, all the impulse people are out. Let's see what they do, how they deal with this, and they'll pull back the price. And that's when it sounds like you like to then enter into the trade, which from a risk versus reward perspective, that makes a whole lot more sense. So you kind of already touched on this because you are in a crazy time frame out in Hawaii, so you're 6 hours behind. But that is definitely one of the benefits of futures. But and you're a student, right? You go to school. Do you work like a part-time job or full-time job or anything?
Yeah, I work a part-time
Okay, so
job.
you're a student, you're in a crazy time zone, and you work a part-time job. So how are you fitting kind of all your homework, your everything as far as planning trades and mapping everything out? Because a lot of people out there, I'm so busy. Well, here we go, listeners. Here is somebody that's super busy as a student, part-time job, crazy time zone. So walk us through your routine. When are you doing homework? When are you, kind of structuring, how you want to approach, the trading day?
Well, like a lot of people have probably heard of this, and you guys probably heard of this, but it's really important that you do trade, you treat your trading as like a business, and that you do have set hours that you do things and you keep that relatively consistent throughout your trading career, and that's not only to keep you accountable to make a plan, but it's also important to know when to distance yourself from the market so you're not in front of the screen all day and that you're spending time with your family, spending time with your friends. So it really just comes down to you setting those hours to plan out your trade and knowing when to execute your trades and if that's in your kind of schedule or time frame.
What are your hours out of curiosity?
So I check what the open and close is at from the New York close to the Chicago Open, which is right now from 11 to 12, so it's still closed right now. I check what happened throughout there, and then I kind of keep tabs on it throughout the Asian session. And a lot of my trades would start to work out in the London session. And that's where I find it a little easier to trade, a little less choppy. I can trade like crude oil and gold, the bigger markets. And then depending on how my day is, I might continue on to the New York session, or if I'm having a really good day, there's no reason to continue going, and then I hit my profit targets, and I just did my work for the day, so I just take the day off.
I think that's actually really smart though, but it all kind of comes back to you treating it like a business. So you kind of know what market you generally excel in terms of the time frame. I'm not talking about gold or oil specifically, but and I'm in full agreement with you. For the U.S. session, there are some wild moves up and down, and granted, it can be good and it can be bad, but depending on your time frame and your trading strategy, that's going to kind of make sense. So there's definitely movement and kind of you can definitely find opportunities. And personally, I always find it's in the European market. The Asian session, I've always found from watching it myself, I actually thought about trading those sessions. It's usually too quiet for me in terms of what I'm kind of trying to trade. But I think it's actually really interesting that, you set your hours. It's like a business, and even though the market's 24 hours, you can't. Your life will slowly go downhill if you just sit here and plink away all day. You stay awake for 20 hours just trying to force trades all the time. There's no reason to do that, and that will definitely take an impact not only your life but your trading account too. But what would you say are some things you kind of want to work on into the future here? Kind of your weaknesses or what you're trying to improve yourself personally.
In terms of weaknesses, I'm still trying to discover new edges every day. I'm just still trying to see what what works now might not work in the future, and it will take some time for you to find that out. So that's it's you're only as good as your last trade. So there's no you can't ever become complacent and comfortable with what you're doing. You always have to be adapting your strategy, like observing the market and seeing if your strategy is still working, and sticking with your strategies through rough drawdown periods, or taking a break, cutting down your size if you have a bigger account during those drawdown phases, because statistically speaking, you're bound to have a drawdown phase at one point or another, and your goal is just to not is to just preserve your capital during those rough times, and save it for the times that your strategy does excel in.
Well said. Well said. Now, you're still looking to find more edges. What sort of edges are you looking to find?
Personally, I look at a lot of seasonal patterns, and that's partially why I journal, because I don't believe that news really drives the markets. I think it's just fluff by the news companies to give the market a reason to do certain things. And that since, I know Ches talked about the recency effect, that we don't really think about what's happened, a year before around this time. And we kind of forget about what happened. And if during our planning, we kind of assess everything about our expectations of how the market is moving seasonally, or like what is different this year, I think I find a lot of my edges in just pretty much the seasonal patterns.
So I guess what I'm asking, I'm not saying that this is what you're doing, but I am also saying just be aware, be self-aware, that make sure you're not don't find yourself trying to find the Holy Grail, because at some point, I need more edges. I need more edges. I need more edges, and it almost becomes like a quest for the Holy Grail. Again, I'm not saying that's what you're doing, but Ches, I want you to touch on this, because I know we can both, we've both been down this path. But Ches, I feel like you may be the king of those that have searched for Holy Grail. So again, Tony, I'm not saying that this is what you're doing, but for listeners out there, it's a very common pitfall. You think that you can find every single little edge, every single little nook and cranny, and put together some world beater system. But Ches, in a nutshell, walk the listeners through your kind of Holy Grail path.
I mean, I've tried kind of odd time frames that, were more mathematically based on something or other, and I've tried range bars and Renko bars and kind of all this other stuff. And in reality, I've found the most success trimming it down. And the reason why you look for the Holy Grail, or anyone looks for the Holy Grail, is because we as humans like to be right. That's just a natural thing. It's something we're all kind of born and raised to want to do. If you answer questions correctly on tests in school, you get good grades. Good grades lead to good jobs, and blah, 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 so on and so forth. But in trading, it's the one place where the hardest thing to do is accept that you don't know what's going to happen next. You have no idea. The only thing you can do is put the odds in your favor as best you can with whatever methods and whatever kind of indicators or lack thereof. The best trading I ever kind of had after kind of going through this for more than a year, it was probably a 2-year Holy Grail search where I would just spend hours back testing stuff, especially on futures, was to remove the indicators, add a couple moving averages, and just trade simple patterns, simple price action. Keep it simple. And the thing is, to not be hung up on the losers. Make sure your losers are small. They're definitely frustrating when you get 2, 3, 4 in a row. But the thing is that you're just going to need to keep it simple, and you're going to need to accept that losses are a part of the game. Tony takes losses. Every single person who trades takes losses. And if you think you can find this moving average crossover system blended with this RSI, blended with this MACD, and you'll get a 95% win rate, that's great, but the odds of you getting into trades are probably like twice a year. And then one time it doesn't work out, if you have no stop loss parameters, you've blown your account up anyway. So keep it simple. There's no need to kind of overcomplicate it. And like I said, we're not jabbing at Tony saying he's doing this, but we just want to give fair warning to listeners out there. While you think you can build this absolutely amazing robotic trading system type thing that will just, a 4x auto bot or something with a 95% hit rate, that's all garbage. It just doesn't work. But finding something that works for you personally, and like I said, for me personally, it was just simple patterns, simple bounces off moving averages, stuff like that. That's what kind of got me out of the funk of trying to find this thing that'll always win all the time. Accept your losers, keep them small, and that's what keeps you in the game.
I don't know, Ches, what you're talking about. I got an email from a Nigerian prince who's developed a trading robot, and for $99 and my social security number, I just sent it to him, and I'm expecting good things. So I think you're crazy with all that talk, Ches.
Yeah, that's true.
I'll write you from my yacht as my Nigerian prince with this trading robot. It's making me all kinds of money. Now, Tony, you were. I love the openness about some things you want to work on, but let's pat yourself on the back too. What are some things that you think you're doing very well, and some things that you feel is a strength going forward that you can kind of build upon and leverage?
Well, I do want to touch back on something real quick. About what Ches said. I think that, like a lot of like there's a big misconception, and a lot of people think that there's the holy grail in indicators, and indicators are just really there to filter out your trades. There's no holy grail set of like pattern or indicators. It's just hours of screen time watching price action, knowing that after like how much the market has to go against you for you to be wrong, accepting that risk before you pull the trigger, and just letting your trade work out.
I absolutely agree, and Ches, I would assume that you're in full agreement with that too.
Absolutely full agreement.
I actually read a study that you could, like, people who like to use Fibonacci's, you could literally draw random lines on the chart using an RNG generator, and then you could place those lines on, and then you can conceive patterns in your mind on where the candles bounced off those levels. So I don't think there's any holy grail indicator in the market that anyone can rely on.
If there was, I assure you it would have been discovered already. The big money on Wall Street would have found it, and I assure you they would not be advertising the system on Facebook ads. I don't know why all of a sudden it's happening, but when I scroll down my Facebook wall, all I see is some sort of advertisement that's implying that they have some sort of system that they're going to teach you. And yeah, we won't go down that rabbit hole. But Tony, what about some strengths here? I mean, what are some things you feel like you're doing very, very well on? And some things that where your confidence level is, I feel great about that.
I feel great about something I've been working on recently was to cut down the time in my losses quicker, and just overall just cutting my losses quicker and realizing when the price action is going against me, and not lying to myself saying that it's gonna come back to break even. And just clicking the close button if the price action doesn't look like it's going in my favor. And, like looking back at my journal, a lot of the times when I don't think it's going to go back in my direction, it really doesn't. So, being in denial just leads to bigger losses.
That's a great quote. Denial.
That is a great quote.
Denial can certainly lead to the bigger losses for sure. Now, do you use a hard stop, or are you doing like a manual entering into your stop loss? Because it sounded like sometimes you have struggled just clicking the close button when you should. So what is actually the logistics of your stop loss order?
I have a disaster stop loss, but in terms of clicking, I actually usually take the loss before the stop I actually set, just because that's a disaster stop, and I generally know when the price action is going against me, and that if it is gonna turn around, that I'm gonna have to wait for an entire move up before if I'm shorting before it comes back down, and I just don't want to sit through that pain. So it's better to just get out in the meantime while you're unsure.
Preach it there, brother. I'm the same way. There's some times where it's like, all right, this could still be a winning trade, but now I got to wait for this little consolidation thing to happen, and then I got to wait for it to go sideways, and then hopefully form some sort of cliff point, and then hopefully it'll break down through there, and then I'm still in a good spot. But I'm with you. It's like, or I can just, in the spirit of the time value of money, let me just take my loss right now and go find something else, and it is what it is. So I can totally relate to your logic there in terms of just not wanting to sit there and wait and wait and wait. So I fully there. That's something that, now if you don't want to do that, again, trading is personal preference. But Tony, it sounds like you and I are the exact same. In that regard. So what are your plans as we start to wrap things up? Do you have any goals in terms of, I want to venture out into other instruments of the market, or are you pretty content right now? Or are you pretty set on just staying with the futures market?
In terms of long-term investments, I do have a few in the equities market, but in terms of trading, for the most part, I'm comfortable with the futures market and the markets that I trade. I don't think I'm gonna really expand too much because each market is different, and I'll have to, do a little trial and error on demo on the new market before I really jump into it and just know that like the ins and out of it. And it's just more comfortable and easy to stick to what you know. And if it's paying the bills, then it's paying the bills. Like there's no need to switch to another instrument.
If it ain't broke, don't fix it, for sure. And I know Ches and I can get behind that logic for sure. And I'm trying to think what caused you to stop trading options, and that time frame transferring to, because what I'm getting at here is, I'm assuming do you feel as though you gave options enough time to work? Like, did you give that a good go and you collected enough data to know that options aren't for you?
Yeah, I think going back into options with what I learned from futures, I could definitely do a better job. But it's just the fact that I'm already looking at futures every day. If I ever went back to options, like trading them, I'd probably only trade the index options, because I really don't like building different equity watch lists every day. And I like to have my lines drawn out and look at the same thing every day and just kind of assess like, oh, did anything change? Is my long-term thesis still valid? And it just makes it easier for me.
Okay, and my point was just make sure you give futures now an honest try. If you hit a little rough spot, and it sounds like you've already been doing this, but you don't want all of a sudden bail out on futures, like, well, futures don't work, and then you're all of a sudden when we interview you next time, you're doing, I don't know, binary options or something crazy like that. You just give it a good, honest try. But like I said, from the way you've been talking, it sounds like you are doing that, and you're not gonna. It's not like you're teetering on the edge of, well, I think I might be done with futures. It sounds like you're grounded with both feet, and you're ready to keep on with it, even if you enter in some rough patches. So that's always a good thing, because Ches, we see it all the time where talking with people through customer service, they try something and then you press them a little bit more on it, and then you're like, well, did you really try it, or was it just you tried it and then you took a couple losses, and therefore your conclusion was, well, yeah, I have like 5 data points and I took a loss, so therefore it doesn't work. I'm going to go try something else. We come across that quite a bit, don't we?
Yep. Yeah. That That is combined with the shiny object syndrome, where it's just you're just trying a bunch of different stuff to see, oh, maybe I could trade one better than the other. And I'm not saying you can't, because some people find a lot more success in futures. Some people have tried everything under the sun, and they come back to what they do best in. But the reality is, just like you said, if you decide to go into options and you take 3 options trades and you lose on 2 and you make money on 1, 3 data points is not enough to know, if you actually know what you're doing. You never really gave it kind of the honest try like Clay and I are kind of suggesting. So it sounds like, Tony, you kind of found, you like futures, you have your strategy, you know what you're doing, you know where you excel at and where it's kind of more difficult. So I have a feeling that we don't have to worry about Tony giving it an honest shot.
Yeah, no, I agree with you there. And looking at the time, we'll wrap this up, but and we'll definitely have to have you back another time. Also, I want to give you a quick shout out. Thank you for volunteering to come back. I appreciate it. It makes Ches and I's life a lot easier when we don't have to chase people down and bag them and force them into corners and then waterboard them and stuff like that. So I appreciate you just volunteering and making our life easier. But did you have any final things you wanted to touch on or whatever? I mean, we'll keep going, but I don't want to cut you off when you still had another point or another topic you wanted to touch on.
I mean, no, I mean, like, I really genuinely do like helping people out. I like to help them realize early on to set realistic expectations, just so that they don't, expect to get rich overnight. They understand that this is going to take years. It's a lifestyle, it's a commitment, and it's a series of grinds and small winners that add up over time, and that you're not going to have that one trade that it's going to hit the fences and you're just gonna hit it out of the ballpark and you can buy a yacht.
Yeah, the one trade retirement. Yeah, that's you're better off playing the lottery if that's your goal in trading.
Yeah.
Yeah, you're just gambling at that point.
Well said. I love how you said it's a lifestyle, because it really is. It's not a lifestyle in the sense of, like Ches was touching on earlier, where you're sitting in front of your computer for 20 hours a day trying to force a trade. That's not the lifestyle that's Tony talking about. It's just a lifestyle of accepting the fact that it's always going to be a grind. I'm always going to be thinking about it at some point during the day, and even when you're not doing it. And it's just, at the end of the day, it circles back to what we talk about all the time here. That's why you have to have a passion for it. If you don't have a passion for this stuff, you will burn out so fast, it will make your head spin. And it's just, then of course, it's all rigged. But no, you fell for some Facebook ad that implied that you were going to, be driving around on a yacht surrounded by beautiful women pouring champagne on you. And it didn't happen, within the first 2 months. So therefore, you've burned out. You got to love this stuff. You got to want the challenge and lifestyle. That's perfectly, summarized on Tony's part. So are you willing to come back again in the future so we can get an update and hear more about how all this futures and, in your words, self-discovery has all unfolded?
Yeah, there's always more things to add, more things to learn, more experiences to share. And I think that's valuable to everyone.
I agree, and that's why we sit here and we're all doing this, because we clearly all believe that experiences and just shooting it straight can help. So again, I thank you very much. And Ches, do you have anything final for Tony or?
No, Tony, thank you for taking the time. Clay, thank you for letting me thank our guest
That's 2
again.
weeks
This
in
is
a
a good
row.
habit we're
That's 2
getting
weeks
into.
in a
I know,
row.
we're doing pretty good.
Yeah.
But yeah, it was a pleasure talking to you, and I totally agree with kind of a lot of stuff you said. And just for new listeners out there, it's kind of like a little Cliff Notes thing. Journaling is important. It helps you spot things you do poorly and kind of help correct them. But yes, Tony, it was an absolute pleasure, and thanks again for being a guest.
No worries.
Well said, Ches. And Tony, from me to you, thank you again, and I look forward to getting an update on you later on down the road.
Yeah, I think it's always cool to see how people progress when they come back. I think those are the most interesting episodes, and see what they learned from the previous interview to the next interview.
I agree. It's enjoyable from where I sit, because some people, everybody makes big strides, but everybody makes big strides in different ways, and their pathways are always different. Their experiences are always different, but there's always those common themes that occur. But it's super fascinating. And I agree. I really enjoy, when we have people back, and from the feedback, it sounds like listeners enjoy it too. So I appreciate that feedback. And again, Tony, thank you very much. Now, the final thing before we all go, 3 groups of people out there. First, if you're listening on YouTube, check out the rest of the channel. There are other videos, and hopefully when you check out the videos, or maybe you decide you want to subscribe just based on this video alone, being the podcast, that would be great. But yeah, please check out the channel and subscribe to it. If you're listening on iTunes or any of the other podcast players, be sure to subscribe so you know when new episodes are released. And especially on iTunes, if you want a very quick and efficient way to help us out, if you could leave us a rating on iTunes, that really that does a lot for us, and we appreciate that. And finally, if you're listening on the show notes page at claytrader.com, leave us a comment. We read those, we will reply, and click that share button. And little clicks of the mouse really do help us out, and we appreciate it. So thank you again to Tony. Thank you again to Ches, our esteemed co-host. We'll see you back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.